There we go. It must be real, David, because we got the warning that the recording is in progress.
There we are. I heard that loud and clear. So, no, very much looking forward to this, Andy.
How you doing? You okay? You had a good day?
I'm doing very well. Yes, nothing, never a dull day in the world of dental finance. Always kept on our toes with various queries, questions, solicitors, but all
It,
good
it,
fun.
it it's funny, isn't it? People wouldn't just naturally assume that the world of finance isn't dull because normally when you're talking about money, it's like it's like a jackanory. But the brutal reality is, there's that phrase that money makes the world go round, and it's so true, isn't it? We need money just for everyday society. I mean, and we're not talking about that tonight, but it's such a fundamental, important part of society, money, isn't
Oh, it absolutely is, and particularly trying to prize that money out of the lenders to
it?
to ensure our customers get hold of that money to buy the practices as well. So yes, all fun and games, but keeps us on our toes, and yeah, we enjoy it.
Brilliant, brilliant. Well, what we'll do is we'll just give it a couple of seconds because there's people coming into the room at the moment, and then we'll start and we'll get going, which is good. But we'll definitely have you away by 8 o'clock this evening,
That sounds good.
which will be good. I can't believe that we're running up to the end of the week already.
It's gone. Well, the whole year has flown by. So I can looking out the window here. It's 7 o'clock and it's getting dark already, which is
Mm,
hmm.
yeah.
I think yesterday was 100 days till Christmas as well,
Oh,
which is a
gee.
quite horrible stat that I
Yeah.
heard.
I think in dentistry is the funny thing that starts happening about this time of the year is all the events
Yeah.
seem to start. So you have all people. So there's a couple of things happening tomorrow. There's an event with CareStack that Rory Sutherland is one of the guest speakers at. And then Dr. Mahilo Presti is doing an event in London, a Dentarama event. And it certainly feels like once the summer's over and everybody's back
Yeah.
from their summer break, all the events and the awards and everything start to kind of creep into people's calendars.
Oh yes, the conference and seminar season. We're well and truly in it.
We are. Right, well, we've got a decent number of people join us already. So we always say that we don't like to punish the punctual. So we'll get cracking. And tonight, our guest is David Brewer. He's the Managing Director of FTA Finance, finance arranger and bank manager extraordinaire of 30 plus years standing. How many years have you been in the world of finance, David?
The world of finance. Oh my goodness, I'm aging myself here. Business finance. We're looking at 30 years. And
Wow.
you could probably add a bit more onto that with personal finance before that. So,
Brilliant.
yeah, some of that at a bank, but for the past 16 years now, it's FTA Finance.
Brilliant. And David and his team are quite remarkable. In most years, they'll have arranged about 120 million pounds worth of finance for healthcare professionals, but predominantly dentists. And it's an impressive number for what you and your team do. But I think it's a number people need to know because there's a lot of talk about are the banks lending, will the banks giving money? So when you hear a number as big as 120 million, it really goes to serve the fact that the banks are lending and they are supportive and it is a green light profession. So tonight, David's talking about it's a beginner's guide to buying a dental practice. And he's going to cover understanding the market, how to get started, the considerations when talking and approaching a bank, how to evaluate practices, tips for viewing a practice, and then what your funding options are. The question and answer box is open. So if you have any questions, please chuck them in there. And depending on how they fit with what David's talking about, we'll pick them up as we go. If not, we'll catch all those questions at the end. David will probably talk for 45 minutes-ish, something like that. And then I'll jump back in at the end and we'll have the Q&A at the end. So for now, David, I think what I want to do is I'm going to turn my camera and my microphone off so everybody gets your full attention. And I'll leave you to give your talk for us.
Lovely. Okay, Andy, thank you very much. And hello and good evening, everybody. And thank you for spending your Thursday evening listening to me. As Andy mentioned, my name is David Brewer. I'm Director of FTA Finance. The seminar today, as it says on the screen, Beginner's Guide to Arranging Finance. This seminar is very, very much tailored to first-time buyers. So it is not designed for practice owners, although some practice owners may well be listening in just to see what's going on. But this is very much a first-time buyers seminar. And during this short presentation, for the next 35-40 minutes, I'm hopefully going to be providing some useful tips and suggestions for you. Tips on really where to start during the purchase process, so things you should be looking out for. I will touch upon the joys of financial jargon that you may come across and how best to cut through that. I will highlight some important points and factors that you should be keeping a lookout for when you're looking to buy a business, and generally providing advice and guidance when it comes to business plan preparation and forecasting. So if you are a first-time buyer and these are points that you're interested in, you're certainly in the right seminar. A little bit more about FTA Finance, if that is okay, just so I can sort of hopefully qualify as to why I'm speaking to you here today. We very much are a one-stop shop for the dental profession. As Andy mentioned, we're involved in a lot of dental transactions, and in a typical year, we help the best part of 100 first-time buyers purchase their first practice. In addition, we work with practice owners and also other sectors, because we work quite closely in the pharmacy sector as well. But primarily, we're first-time buyers on the who are buying dental practices. So bearing in mind we've been established for 20 years and we average 100 first-time buyers buying their first practice in a typical year, 100 times 20, that's the best part of 2,000 first-time buyers we've set on the route to practice ownership. So hopefully some of you guys listening here today will also add to that list as well, because we want to also put you on the route to practice ownership. It isn't just established practices. We are involved with startup finance as well. The wonderful phrase in the dental field is squats. So we are involved in dental squats. This particular seminar is not geared up towards dental squats. That is a whole seminar in its own right. So if that is something you're interested in, startup finance, we can help you, but it's probably best that you message me separately, or me and my team separately, and we'll pick up with you regarding that later on. It isn't just commercial finance. We are involved in house purchase, so residential funding as well. So for your own property, if you've got a buy-to-let portfolio, we can help with the whole range. So very much a one-stop shop for dentists and very much champions of the first-time buyer. A little bit about the dental market and what's happening out there, because there is a real big disparity between market perception, what people think is happening, and market reality, what is actually happening out there. Top of the list here, I've got who is buying. And the perception with most people who ask the question of why are the goodwill values so high, why aren't they reducing? They believe that it's corporates who are keeping the market going, and the corporates are the reason why the prices are so high, corporates with their very big pockets who will buy anything. The reality couldn't be any further from that. It's not corporates. Corporates are incredibly picky about what they buy, and also most practice owners don't actually want to sell to a corporate. The market, the goodwill, the reason they're so high is probably because most of people like you listening to me here today, it's being fueled by first-time buyers. The only way an associate dentist, the only way a locum dentist can be in control of their future is actually to own and run their own business. You are incredibly vulnerable in your current position because as an associate or as a locum, you have got next to no employment rights. You probably found out, if you were working during the COVID period, that you were probably the first to have been let go by your practice owner. The staff, the salaried staff, have got protection under law. You as a self-employed individual or trading as a limited company, very little protection. The only way you can be in control is to own your own business, and that is why we have a lot of first-time buyers chasing a finite number of practices. That's the reason why the prices are high. Perception and reality, NHS versus private. A lot of first-time buyers I speak to feel they have to buy a predominantly NHS practice. They believe the banks prefer lending on NHS because of the stability of the income, the guarantee of the NHS income. The reality actually is very different. The banks actually don't care either way. The banks are happy with NHS, private or mixed. The vast majority of proposals that I'm involved in now actually are predominantly private, so either fully private or where the majority of the income generated is private. And I can see the market moving more and more in that direction, actually with a lot of practice owners actually handing back their NHS contract at the moment because they know that they can generate more profits on the private side. So this isn't a moral crusade here at all on this bit. I'm not going to discuss the morality of one versus the other than to say the banks have got no issues lending on either option, but the majority of funding proposals we're involved with tend to be majority private. And finally, a little bit about bank lending appetite. I still hear it from people that they believe the banks are still quite cautious, particularly as the vast bulk of what's potentially being purchased is goodwill. So there may not be any tangible asset there. The reality actually is, for you listening here today, good news. You are viewed a green light sector. The banks have got no problems lending against goodwill. And as I will touch upon a little bit later, there is currently a good, healthy degree of competition between the high street banks at the moment. Most of the banks, including a couple of new ones, have now woken up to the fact that actually dental is a very safe and secure sector. And they're coming up with competitive, even more competitive and even more flexible terms. So it's a good time to buy a practice. So where do you start? Now I'm going to take you back to the very beginning. I'm assuming you woke up this morning and you thought, I want to buy a dental practice. What do I do? Well, before you speak to me or to anybody else, I would strongly suggest speak to your family, either your family or close friends, basically people who know you better than anybody else. These people will hopefully then be very truthful because owning a dental practice is not easy. It's tough. The hours are long. It will test your patience. It will test your negotiating skills. It will stretch your finances as well. Not everybody is cut out for practice ownership. So please do speak with your family who hopefully will give you an honest opinion. Another reason for speaking with family, bank of mum and dad quite often come into play with dental practice purchases for deposits towards the purchase or possibly to cover other costs. So do let your family know what you're doing. You never know, they may be willing to help out as well. The next thing I would suggest is compile a wish list. So basically, what would constitute your dream practice? I normally say come up with 10 bullet points. Top of the list will be location, and for most people that's normally within 10 miles or 5 miles of where they live. But then other points would be, are you looking for NHS or private? How many chairs are you looking for within the business? How many staff would you like? Ideally under your control. Is car parking a big issue for you? Do you prefer to own the freehold of the business, or are you happy with leasehold? You can see the sort of things I mean with this wish list. What I would then say is your ideal practice probably does exist, but it's also going to be incredibly expensive because your perfect practice is probably the same as I would suggest half of the people on this seminar. When we do this face-to-face, the last face-to-face seminar we did was in the Hertfordshire area, South Hertfordshire, quite close to Potter's Bar. We had a room of 15 dentists, and their ideal practice was exactly what I had written down here. Effectively a 3-chair, mixed, established for 30 years, freehold practice in Northwest London. Now, bearing in mind it was a Hertfordshire seminar, that's why Northwest London is quite common. I am sure that will probably resonate with a few people who are listening here today. Now, that practice probably does exist, but it's going to be very expensive. Supply and demand, lots of people wanting that type of practice. So when it comes to your wish list, one thing I would say is please try to compromise if you can, and particularly if you can compromise on the location. So the further away you are from the larger cities, the better the value for money it will be. Not talking miles away, 30 miles north of London, 30 miles outside Birmingham, 25 miles outside Manchester, the prices start dropping. So hopefully you can be flexible in your area. The next point there is basically how much can you borrow? And I'll cover this on the next couple of slides. By getting a little bit of information from you, I can give you a good idea as to how much the banks would lend and the size of practice that you can buy. Do register with a dental sales agent. Now, this is a Frank Taylor and Associates seminar, so I'm hoping you're all registered with Frank Taylor's for practice details. If you're not, please do in the morning, very first thing. But what I will also suggest here is Google dental sales agents. There are others out there. I would suggest that you register with really as many as you can, just so that you've got the whole of market overview of the practices that are available. And finally, the last one, you might want to be a little bit careful here, but sometimes letting people know that you're planning to buy could reap dividends. Your current practice owner, now depending on your relationship with him or her, you may want to mention to them that you're thinking about buying a practice. You might strike lucky. It could well be that they are thinking of selling their practice, not immediately, but maybe in 12 months, 18 months, 2 years' time. And a lot of practice owners like to sell to people they know already. You would be the ideal person to sell to, potentially. So obviously, be careful. You may not have the best of relationships, or you might be quite new in your current job. But when the opportunity arises, do let people know that you're genuinely looking to buy. The most common question I am asked by customers, particularly in a first discussion, 2 questions: how much can I borrow? How big a practice can I buy? Now, I can normally answer that by just getting a little bit of information from the customer, effectively to enable me to undertake a financial pre-assessment. Now, top left-hand box, your CV, a very underrated document. You've probably all got CVs, and those CVs will be perfect clinically. So for applying for your job, no problem at all. If you're looking to borrow money, we need to, let's say, bolster this CV, enhance this CV to build in aspects of managerial experience. Because if a bank is going to be lending to you to buy a business, we want to be able to demonstrate to them that you've got the capabilities and capability of running the business. Now, you may think, I haven't got any managerial experience. Well, the reality is, in your day-to-day job, you probably have. You may cover when the current principal is on holiday. You may have been involved possibly in the recruitment process of the practice, not necessarily for dentists, but maybe for nursing and reception staff. You could have helped during a CQC inspection. You may have family members who own and run dental practices. You may have family members who own and run other businesses, not necessarily dental, but they could potentially act as mentors for you. These are all points that you should be putting in your CV to demonstrate to the banks that their money will be safe with you. I will also then focus on your prior earnings as an associate or as a locum. So I'm hoping that you've all got an accountant, and I'm hoping that this accountant prepares annual accounts for you. If they don't and you prepare your own tax returns, that's fine, but you might want to start thinking about getting an accountant on board. The reason being, any lender will look at your prior earnings. Now, I know that your prior earnings don't reflect the full picture, because you have to give, in some cases, half or if not more of your true earnings back to your current principal. So as long as I know what your pay rate is, so it could be 50% on private, maybe being paid £13 per UDA, whatever it may be, as long as I'm told that, I can work out what your true gross would be, so that when you buy a business, if your gross at the moment is 200 and you're buying a practice where the current owner's grossing 250, that's a reasonable leap of faith there. If your current gross is tiny, maybe 50,000, and you're looking to take over where the current owner's grossing 300, we might need to explain how you could make that jump. Now, again, it could be that you've been working part-time, you may have been on paternity leave, you may have been off sickness for other reasons. As long as I know the reasons why, I can build that into the story. First bit of bank jargon here is an ALI, which effectively is a personal financial profile. So ALI stands for Asset, Liability, Income, Expenditure. It's a snapshot of your current financial position. And I ask all my customers to complete these. If you go direct to a bank will also ask you to complete the same as well. All I would ask is, please fill in the form fully, take your time filling in the form, and please be as honest and as accurate as you possibly can. I quite often get forms back where their savings are 0, assets are 0. If that's the case, nobody's going to lend to you. Doesn't necessarily mean you have to put any particular money into the venture, but the banks are more inclined to lend to people who've got a stable financial background. In most cases, they would expect you to have a level of savings, so please detail them on there. Doesn't mean it's all going to go towards the purchase, but please show your savings. If you own property, please detail the property and the mortgage details, and please be as accurate as possible with your monthly expenditure. Bottom left-hand box, contribution and commitment. In most cases, you would be expected to put a cash contribution towards the purchase. For a first-time buyer, as a rule of thumb, I would suggest that you contribute 10%, or at least budget for 10% towards the goodwill purchase. The freehold, you might get 100% if there's property available, but for the goodwill, as a rule of thumb, 10%. It does vary from bank to bank. Some banks want 20% or more. There is one bank at the moment that we believe will be offering 100% on goodwill, subject to certain very strict criteria being met. So it's early days, but if you're looking to buy, budget for 10%, it shouldn't be any worse than that. And by answering all of this, we get to the financial pre-assessment. And I'll show you a little copy of one that we did earlier today. I was speaking to my customer, Nishma. And based on what Nishma told me and the information she sent, we believe that she can comfortably purchase a practice of up to £750,000. Doesn't mean Nishma would get £750,000 on any practice, however, because we then focus on the individual business that she's looking at, because some practices are better than others, and some just simply wouldn't be viable. And that's where we come on to the forecast, which I'll be touching upon in subsequent slides. But what I would say here, the words at the bottom, please use an independent advisor to work with you when you're looking to purchase and to help compile your business plan and to help negotiate with the banks. I'd love you to work with me. You don't have to work with me, but if you want the best possible deal, work with an independent broker who can access all the banks, understand how the banks operate, and can press for the very, very best possible terms for you. So quickly back to the financial pre-assessment. As I said before, it doesn't mean that Nishma's going to get 700, can buy any practice for 750. It really does boil down to the financials now of the practice, because the practice has to be financially robust. Not necessarily how it's being run at the moment, but more so how you're going to run the business going forward. And just quickly going back to that slide again, I should have mentioned this before, having one of these actually puts you in a stronger position. Any one practice that comes to the market, there's normally 7 or 8 people reviewing this business. If you're the one that's been financially pre-assessed, you already demonstrate to the sales agent and the seller that you've thought about it and that you're a very, very serious prospect. So it can make a real difference between somebody considering your offer or not. So when you're looking at practice details, so you register with the agents, they will quite often send through to you in a typical week. So assuming you've registered UK-wide, you'll probably get details of 5 or 6 dental practice prospectuses, which effectively is like when you're buying a house. There'll be a picture quite often of the practice and a summary, but bear in mind this is reflecting the business in the best possible light. The agents act for the people who are selling. Their job is to get best value for the business. Their job is to act for the seller, not for the buyer. I act for the buyer, and my job is to then cut through this prospectus to focus on the points that need attention. So when this comes through, you compare this with your wish list, and in a lot of cases, if the location is too far away, you'd probably dismiss it. But in a typical week, there's hopefully 1 out of the 6 or 7 that tickles your fancy, that you wish to go further with. So you'll then contact the agent, and they will then hopefully send you through the financials for the business. Now, when you've got the prospectus and the financials, points to focus on that I would typically focus on will firstly be the staffing arrangements. Not necessarily the salaried staff, but there should be a breakdown of that, but also in particular the associates and the hygienists, so effectively the self-employed individuals. Certain practices may be completely associate run. So there might be a corporate business where the corporate doesn't have any day-to-day involvement, fully run by associates. Quite often these practices have relatively low profits. If you took over this business, well, the first thing you'll do is probably get rid of 1 or 2 of those associates, because you will be the principal owner manager, and that will immediately have a big boost to the bottom line profit. Property status. So again, is it freehold or is it leasehold? It may be important to you, it may not. Again, I'll touch upon that in a subsequent slide. The financials, the year-end accounts. We're now in September. most practices, their financial year end is March, either March or April. So I would expect accounts for year end March 2025 to be available by now. Sadly, a lot of practices we see come to the market haven't got accounts that are March 25 at the moment. The most up-to-date we've got is March 24, which means we're working off information which is the best part of 18 months or more old, which isn't ideal. And that then brings me on to the next couple of letters there, the bank jargon again. MI stands for management information. In the absence of formal accounts, we could work off management information, which effectively is information provided by the vendor, normally from their own internal systems, to firstly show the turnover of the business, but also hopefully to cover all of the expenses as well. Now, these aren't as good as the accounts, but they're at least a temporary step to enable a proposal to be assessed before the year-end accounts are made available. The next bit of bank jargon, EBITDA, stands for earnings before interest, tax, depreciation, and amortization. Lovely bit of bank jargon there. Ultimately, that means adjusted net profit. Now, quite often the vendor's accounts are prepared in such a way to minimize tax. So quite often there are expenses in there which are personal to the current owner, which need to be added back. It is not uncommon for the vendor's spouse to be on there, maybe paid a salary of 30,000 to do managerial duties. The reality is they don't do a lot, they just pay £30,000. You take over the business, you're obviously not going to inherit the spouse. So that's an immediate saving there. Depreciation is another very common entry that we see in accounts. Now, this is a legitimate bookkeeping entry which effectively spreads the cost of your asset over a number of years. Net result is it reduces the tax that's payable each year, but it's not cash that's walking out of the door. So when you look at a set of accounts, depreciation and amortization are costs that you can easily, that you will immediately add back to demonstrate the true profit. And particularly when we're preparing these forecasts for you, if you're going to go in and effectively replace one of the associates, or you could grow more than the current owner, this will all have the net benefit of boosting that bottom line profits, because you need to ensure that there's sufficient profit there to cover your loan costs, and most importantly, to maintain your standard of living. And ultimately, you're looking at potential as well. So most practice owner or most purchasers I speak to believe that they can do better than the current owner. And we have to ask the question, is there physical scope to expand? It may well be that there's room for a spare surgery, that's great. Or simple things such as working the lunch hour, because so many practices are still shut during lunchtime. You could open early, you could close late, you could open weekends. Simple tweaks that could be made which would have an immediate benefit and boost to top line profits. And the whole reason for preparing this EBITDA, the adjusted profit for you, is to answer the is it worth it question. Because if you're taking over this business, once your loan costs have been covered, you want to make sure you've got a decent level of profit left over to maintain your standard of living and to also reinvest in the business. The next point, a lot of this is common sense, to be honest. These are viewing tips for when, assuming you've looked at the practice particulars, you're happy with the accounts that have been provided, you want to take the next step, which is to actually physically view the practice. As I say, common sense. First one, if your appointment is made at 9 o'clock on a Sunday morning, turn up at 9 o'clock on a Sunday morning. Don't turn up 20 past 9, because that will really annoy the current owner. Also, don't turn up at 9:15, because chances are they may be showing somebody else round. Do turn up early, but look around the area. What's the neighbourhood like? What's the competition like? Is there car parking nearby? Is there a bus stop anywhere nearby? So turn up early, but just to have a scout around, but knock on the door at 9 o'clock. Prepare a verbal CV. Now, this is a strange one, because you're going to be under as much scrutiny here as the owner is. Most practice owners want to sell to people they like, and also to people that they can relate to as well. So when you're speaking to the vendor, when you're viewing the practice, try to find something in common with them. It may be that you graduated at the same university. You may support the same football team. You might see a picture of their children on the wall and start talking to them about that. Just find some way to relate to them. During the viewing process, I know this sounds weird, don't ask too many questions. You do not want to be known as the awkward one who was asking lots of questions. Now, if you've got lots of questions, quite often you're best saving them for the sales agent, particularly if they're contentious questions. Ask the sales agent rather than the vendor. Also, be positive as well. You walk into the practice, the wallpaper is shocking pink. And you may think, oh my goodness gracious, that is awful. I'm going to rip that down. As soon as I take over, I'm going to paint it a completely different colour. You may think that. Don't say that, however. Be upbeat, be positive. You want the vendor to remember you for all of the right reasons. Do outline that you've had funding agreed in principle. This is the pre-assessment, because again, it will elevate you immediately above other people reviewing the business. Advise you can move quickly. Quite often the vendor will ask you, will you be able to complete in 3 or 4 months? The reality is you probably won't, because it can take a little bit longer than that. But do say, of course, we will do our utmost to complete as quickly as we can. The reality is it will be dictated by lawyers and the CQC, possibly the NHS, but just let the vendor know during that first discussion you're ready to move very quickly. And bizarrely, during this first viewing, try not to discuss price. It's a very emotive point, and probably a discussion you're best bet having with the sales agent rather than the vendor themselves. With the sales agent, it's not emotional. With the vendor, it will be very emotional. Touching on property, so the 2 main types of property we're going to come across are freehold or leasehold. There is a third option, which is a long leasehold, like a 99 or a 999-year lease. They're treated as funding, as far as funding is concerned, the same as freehold. So freehold is ultimately where you own the business and where you own the property outright. Leasehold is generally rental for a shorter term, normally 15 years. Now, first-time buyers are most likely to want to buy the property. And as I said before, 100% finance, assuming it's affordable, is available on property with most of the lenders. However, not all of the practices that come to the market come with the property. Quite often, the practice owner will want to retain the property. So the practice owner may already own the property, but they will then look to grant you a new lease. The reason they do that is potentially for tax purposes, and also to ensure that they've got a steady income coming in. Not a huge amount you can do about that, particularly if you want to buy a practice, if the current owner wants to keep hold of it. All I would suggest there is, if your real plan is to buy it in the future, is to build in an option to buy. So you take a rental agreement at the beginning, normally a 15-year lease, but you've got first option to purchase should they look to sell. What I would say with leaseholds, the banks are perfectly happy lending against leasehold. As long as the leasehold is 15 years, well, ideally 15 years, because most bank loans against goodwill are 15 years or the length of the unexpired lease. If the unexpired lease has only got 5 years, it means your loan is repayable over 5 years and is probably unaffordable. Most sales agents are fully aware of this and would already have hopefully explained to the current owner that they would need to grant a 15-year lease, or at least start speaking with the landlord, if it's a third-party landlord, about extending the lease. I put at the bottom there third-party landlords, because it's not necessarily the practice owner who owns the freehold. It could be a property investor, it could be a company that's based overseas, it could be the dentist who owned the practice 50 years ago, who is the owner. The most challenges we have, most delays we have with practice purchase are quite often linked to third-party landlords who have got no vested interest in the transaction. If there is a third-party landlord, it's not a problem, don't be put off. But what we will get your lawyer to do from day one is to start discussions with the third-party landlord to ensure that the lease can be extended in line with the bank requirements. Now, just touching upon the banks again, as I said before, you'll be pleased to know dental is very, very much viewed as a green light sector. They do recognise goodwill, happy to lend against goodwill. Actually, there are only three professions in the UK the banks are comfortable lending against goodwill. It's dental, thankfully, pharmacy, and also veterinary. They're the three. Any other sector, so if you're looking to acquire a restaurant or any other shop, the bank would not lend against goodwill. They would want additional security being offered. So thankfully, banks have been lending against goodwill for the best part of 20 or 30 years. And the fact there's even more banks now looking to lend, it shows and is great testament to the strength of your profession. If the premises are leasehold, it's not a problem. The banks will still lend as long as that lease has got a reasonable length, ideally 15 years. I touched upon freehold, 100% funding, as long as it's affordable, is possible against freehold. We sometimes have challenges, say particularly in London, where it's a relatively small business, maybe turning over 200,000, but the property's worth £1 million. It's very difficult to get finance on that, because imagine a loan of £1 million and turnover of only 200,000, it isn't affordable. So it depends on the practice, it depends on the location, it depends on the affordability. Now, I would also say again here, the importance of working with a broker. There is nothing to stop you approaching a bank direct. You will, however, have a much greater chance of your loan being approved and also securing much better terms if you work with an independent broker. The terms offered by the banks differ massively from bank to bank, and also the type of customer they're looking for differs as well. And even with the same bank, I know if I put the same proposal to two different managers, I know I'm going to get two different lending decisions. It's quite a subjective process. It isn't a credit scoring process, which actually is good because it enables us to negotiate with the lenders to get best possible terms. Now, the problem I would have is if you go to a bank off your own back and get funding agreed, and the funding is declined for whatever reason, and you then come back to me, it's then very difficult for me to then reapproach the bank. Even if I provide the most compelling case possible, if they've got a decline on file, it's very, very difficult to overcome that decline. Now, if that is the case, there's normally two or three other lenders I could go to. But it's all about first impressions. It's all about getting it right first time. And my strong suggestion is, if you're looking to buy a practice, work with an advisor. Specialist team. Again, bit of a daunting list here. This is something you should be looking to aspire to. Normally, throughout the purchase process, these individuals would fall into place anyway. I've already touched upon an accountant. In an ideal world, you would be working with a dental specialist accountant, a NASDAQ qualified accountant. Probably don't need it as an associate, but as a practice owner, you certainly will. Solicitor, top of the list there. In an ideal world, you would be using an independent, as a specialist, dental specialist solicitor to act on your behalf. In fact, in a lot of cases, the bank will insist upon it. And I can tell you so many horror stories of customers who look to use their own, let's say, family solicitor who's helped them with their house purchase and other smaller business acquisitions, where the whole proposal falls apart because they do not understand the intricacies of a dental transaction. So a specialist dental lawyer may cost a little bit more than the generalist on the high street. Yeah, they are true value for money. They will speed up the transaction and they will fight your corner, because bear in mind the seller will almost certainly have a dental specialist acting for them. CQC, during the purchase process, you will find the CQC application process is a horror beyond belief. It's time-consuming, it's cumbersome, and it's just generally horrendous. There are, however, companies out there who can do this on your behalf. Most charge around £1,000. I would suggest in the purchase process, it's probably the best £1,000 you will ever spend, because it's a headache off your hands. They will do it all for you. Independent business advisor, that is me or somebody like me, effectively an independent broker who has got a whole of market overview. Dental sales agent, so the likes of Frank Taylor. Work with them, let them know you're looking to buy. Relate to them as well, because again, quite often the seller will ask the dental sales agent what they think of you. And if you've been a really pleasant person on the phone, that will be mentioned. If you've been ranting and raving for whatever reason, that will also be mentioned. Your bank and your bank manager, you will view them as part of your team as well. In most cases, with most of the lenders that we would introduce you to, The bank manager would be a dental specialist, so you'll be dealing with somebody who does understand the intricacies of your profession. Bottom of the list there, but certainly will be top once you become a practice owner, a recruitment consultant. Come Monday morning, you've got a full patient list, your associate has phoned in sick, your hygienist is ill for whatever reason. You need your recruitment consultant on speed dial to get somebody in there double quick. The specialist team is about easing the burden. Practice ownership is tricky, and anything you can do to ease the burden and ultimately enjoy running the business is vital for your own well-being. So your path to practice ownership, again, it does and it still is a seller's market. You know, there are still more buyers than sellers. So that's one of the reasons why the prices are where they are. So you need to start out with a plan. You need to stand out from the crowd as well. You know, why should the vendor sell to you rather than the others? The financial pre-assessment that we touched upon before, it's vital. It will already set you apart from most of the other people who are looking to purchase. Planning and researching the business in advance is important, and particularly focused on the adjusted profit. I'm not using the bank jargon there, the adjusted profit. What would it look like under your ownership? What would it look like once you're building any changes that you're proposing as well, to give a better idea as to whether the profit you would react. And as I said at the very beginning, be flexible. You might need to be patient, you might need to be persistent. Your first offer might not be accepted. The second practice you look at, you may not be successful. Being patient, the right practice is out there. You will get there in the end, and hopefully be like my little friend here, Rafiki, with his tooth, and be the owner of your own practice. Now, I said that this will take about 40 minutes, and I think it has taken about 40 minutes. So back to Andy, if you're there.
So, yeah, and David, thank you very much indeed. That was great. I mean, we obviously work quite closely together, but it never ceases to amaze me just how much goes into finance, because I think as the customer, we tend to have a conversation at the beginning, we supply a bunch of information, and then you might get a little bit in between, but broadly the money turns up at the end of the process. But the importance of all those little elements and the various pieces that have to all fit together neatly like a jigsaw, it's so critical.
Oh, absolutely. And that's just the very start of the journey as well.
Yeah.
The easiest part of my job is actually getting the funding and finance agreed.
Mm.
It's the then what happens between the finance being agreed to actually completing on the purchase.
Yeah.
We've come up with a list. There's about 30 or 40 different points that could derail a transaction. Practice valuation, due diligence that uncovers certain issues.
Third party landlords, they normally stir up, don't they?
Absolutely. Our job, the job of a broker, a good broker, is to keep the process on track. And as I say, as brokers, we don't charge. We've got a vested interest in this completing, because ultimately our commission will come from the lending bank. So there's no cost to the customer. But it also focuses our mind to make sure that the deal does actually proceed all the way to the very end.
Yeah, which is great. The questions are open. Somebody has already asked in the questions about a recording, and we can send the recording to everybody. So if you didn't quite catch the beginning, you can catch it at a later date. But also sometimes I think there's a lot to go through. So just having access to it after the event, if there's one particular point that you want to look at, I don't know, asset and liabilities or how to prepare your CV or whatever it might be, people can go back and chew over that again. So if you do have any questions, drop them in there. There's a couple that have come in already. First one is, do you have any suggestions as to whether I should opt for a fixed or a variable rate, which is actually quite apt, given that the Bank of England committee met today?
Indeed. Probably the most commonly asked question, but also the most difficult question to answer as well. There is no right or wrong answer here. It's what you feel comfortable with. You have to weigh up the pros and cons of fixing, and the pros and cons of going for a fixed rate. Obviously, with a fixed rate, you've got the certainty. You know exactly how much you'll be paying, and that won't change. However, the variable rate may drop whilst you've got the fixed rate, and you wouldn't benefit from that. Now, it really does boil down to individual. Again, I would have my views, and if it was me borrowing, what I would do, and personally, if it was me and if it was my first purchase and I wasn't looking to buy any other practices within the next 3 to 5 years, I'd probably want the comfort of a fixed rate for maybe 3 years, because I'm going to be at my most vulnerable. Cash flow is going to be at its tightest during the first 2 or 3 years of the business, and I really wouldn't want the interest rate going up during that period. So as long as
So
I'm
you're basically buying certainty, aren't you?
correct. So as long as I can afford
Mm.
the cost of the 3 year fixed rate, for me, I would probably opt for that. But I'm not borrowing the money. The people on this call
Out of
are.
interest, David, of the people that you help, if you think back over perhaps the last 3 to 6 months, which has been a relatively stable period for interest rates, and we're in a climate where, and I know it didn't go down today, but we are in a climate where there's an expectation that rates are probably going to come down a little bit in the next year. What are most of your customers doing in terms of what they're selecting by way of rates?
It's an almost even 50-50
Oh,
split.
wow.
It
Wow.
really it is, and it surprises me sometimes. Some customers who I think are definitely going to fix. Nope, we're going variable. We know the rates are going to drop. Okay, if I had that crystal ball, that would be nice. But it boils down to individual circumstances. Some may have greater cash reserves, so if the rates did change, it wouldn't be a problem. Some may want to have thoughts about repaying the loan early. And if you're
Yeah.
thinking of making lump sum reductions, then you really don't want to fix, because there will be penalties there.
Yeah. Yeah. Got another question coming, David. Is looking for an associate-led practice very competitive? Obviously, there are less of them for sale, and are you competing against the corporates for these?
It very much depends on the size of the business. You are potentially competing against corporates or larger groups, probably more so than corporates, if it's associate led, because in theory, that's how they're going to operate it. But the way a corporate views a practice, they need to build in and work out what value they're going to derive from the business, because a corporate and a large group have got a lot of other background costs that they need to cover.
Mm.
You, as a first time buyer, would not have those costs. You would be the owner manager in that business. You would live and breathe the business. You would absolutely generate a much greater level of profitability than the corporate. So for you, it will be worth more than the corporate. The corporate will probably look to drill the price down, which is why in a lot of cases these practices aren't sold to corporates. They're sold to first-time buyers. So your competition on an associate run-based practice, again, will depend on the size, but in most cases it will probably be first-time buyers that you're up against. If it's a massive practice, so if it's, I don't know, £5 million turnover, probably out of the reach of most first-time buyers, the groups would be looking at that one. But anything turnover or asking price sub 1.5 million, that's the realm of the first-time buyer.
And I think you're right, because the corporates, they tend to put through their head office cost. One of the larger corporates, it was a couple of years ago now, they told me that they would run £100,000 through the profit and loss account, which is basically just all their additional head office costs to run that business. So where it's a slightly smaller practice, that £100,000 massively detracts from the profit. On the larger ones, not so much. I think you're right. I think it's probably very much dependent on the size of the practice.
Correct.
Now I've got another question for you, David. I think it's going to be quite hard for you to answer, to be honest. So how long does the purchase process generally take? For example, I've had my offer accepted today, so congratulations. When can I realistically expect to take ownership of the practice?
My goodness. Again, I don't want to say how long is a piece of string. It really can vary. The quickest we've seen them happen, 2 months. The longest, 3 years. The reality is it's normally between 4 and 9 months. It's factors out with your control. The funding and finance is normally sorted within the first 2 or 3 weeks. That's the straightforward bit. It's once the lawyers get involved, and you may have the best lawyer in the world acting for you, there may be a complete numpty acting for the vendor. You need decent lawyers on both sides acting together in a proactive manner if it's going to go through quickly. Throw in a third party, a third party as well, such as a landlord. That's another set of lawyers who are in the mix. CQC is another factor that can delay purchase. And this is where me as an agent, obviously we do all we can, me for the buyer, Frank Taylor's for the seller, to keep everybody on track, trying to move things forward. But there are factors even outside our control. So to answer the question, anywhere between 4 and 9 months would be standard. Unusual to go beyond 9 months, unusual to be less than 4 months.
I've got a question of my own, David. What the terms from the banks, are they very similar when banks turn up with their offers? Because I know that you always go to a number of banks. Is it normally that the offers they come up with are incredibly similar, and it comes down to personal preference of bank, or possibly the personality link with the particular bank manager, or can the terms vary quite widely?
The terms can vary quite widely because we never just go to one lender. We normally
Yeah.
go to two. We normally go to normally 4 lenders who we know would lend and would come up with competitive terms. Of the 4, quite often there are 2 that are broadly similar in interest rate, but as you say, it does come down to the journey. You know, who do we believe will be the most straightforward lender to work with? Who are going to fulfil the terms that they provided at the beginning? So they say, in theory, they can make this available. Will they actually follow that through and provide the credit backed approval? What are their lending underwriters like? What is their security like? What is their valuation process like? That all forms part of our decision-making process. Because what we as a broker do, what all good brokers should do, is provide you with a summary of all of the bank responses. And it won't just be the interest rate, because there's one bank that could probably lend goodwill over 20 years, whereas most lenders lend over 15 years. And even though their interest rate might be a tiny little bit higher, the repayments over 20 years are going to be so much lower.
Yeah.
Doesn't mean you're going to borrow for 20 years, because you could repay much faster if you wanted to. But if cash flow is a key, you probably go for the 20-year loan, but accept a slightly higher interest rate. So it really does vary from bank to bank, and the job of the broker is to weigh up the pros and cons and talk through each offer and work out what's important for you.
I was going to say, it's relating it to your personal circumstances, isn't it?
Correct.
It's not a one size fits all.
Absolutely.
We've got another question in, David. Generally, see, this is a gritty question, but it's a really important one. I'm sure lots of people will be interested in the answer for this if you're about to buy practice. Generally, should I prepare for a monthly take-home pay cut if I go from being an associate to a principal?
It depends on the size of practice. In most cases, probably yes, for the first 6 months. But after a year, once you've built in the changes and the changes that you plan to make, I would expect you to be earning more after 12 months than you are at the moment. But the first 6 months, that's when extra costs creep out of the woodwork. That could drain your finances. The dental chair collapsing within a month that you need to get replaced. But I would like to think that after 12 months, you would be in a better position cash flow wise than you would be as an associate. But the key thing is you're in control here. You're not in control as an associate. You can make very simple changes to increase your turnover. You might not want to, but you can increase your hours. Work evenings, work mornings, don't shop for lunch. Very, very simple changes that will have an immediate boost on income.
I think it's a really honest answer as well, because like you say, it sounds like in some cases there might be a short-term step back, but you're building for the long-term future.
Yeah, we have to be realistic there. And yeah, the first 6 months, expect and budget for a small reduction.
Fine.
But hopefully
we've got just over 5 minutes to go, and the questions are coming in thick and fast, so we're going to have to go with fairly quick fire answers now. Will banks lend to an associate-led practice on the same basis as principal-led, i.e. on the freehold, will they give 100%?
In theory, they would give 100% if it's affordable, and that's the problem. If it's associate-run, the profits might not be there.
Right, yeah. So again, affordability will be a key consideration in that situation.
Correct. What I would probably suggest in those circumstances, obviously how we present it to the banks and how you actually run the business can be two completely different things. In theory, you could work there full time if you wanted to. So I would probably prepare a forecast for the bank on that basis, obviously subject to you being happy with this, which show a higher level of profit. The bank is then happy to lend. The bank lends. You've got the business. You can run it how you want.
Yeah.
You may carry on working as an associate elsewhere, so that's supplementing your income. The problem is if the bank is lending on the dental practice and lending on the property, they expect that to stand up on its own two
Yeah.
feet, and quite often showing you as the principal, or at least in there for part of the time, would boost the profit and it will make the bank more likely to lend.
Brilliant. What EBITDA multiples are practices trading for, and how has it changed over the past couple of years?
Goodness, you're probably best placed, Andy, to answer this one than I am on the valuation side.
Yeah,
Because
I mean, they've changed a bit in the last couple of years, not a huge amount in all reality. Despite all the chatter that goes on, there's still strong demand for NHS practices. What's happened is the relative gap between the income types has changed. So if we were about 7 to 10 years, NHS was in much greater demand than private and plan-based income. And then COVID came along, and that changed lots of people's views because they saw the benefits of having plan-based income and the regularity of that income. And so private has come up with the plan-based. So the gap between NHS and private there isn't a huge gap. There's still a slightly stronger demand for NHS practices because whilst they get a hard time in terms of, are people paid the right rate, and there's bureaucracy and red tape, and perhaps sometimes people don't always get to deliver the dentistry they'd like to deliver within an NHS contract, they do deliver an incredible number of patients to the practice. So from a marketing tool, they're quite remarkable. In terms of EBITDA multiples, it is so geographic dependent. And so if you were in the deep southwest of the country, so rural Devon, Cornwall, somewhere down there, you could be at 2.5 times as a multiple of adjusted profit. If you're in central London, North London, home counties, as an owner-led practice, you could be at 5.5, possibly 6 times. It's worth remembering that there's two different types of approach in this. So the numbers that I've given you are an owner-led multiple. So this assumes that you as a dentist will be working in the practice. If it's an associate-led multiple, the multiple of profit is higher, but the profits are lower. But what that means is the value of the practice is the same. So it's a higher multiple, but on a lower profit. And the reason the profit is lower is all the dental fees are delivered by associates. So there's no allowance for a principal in there. And we make an assumption the principal is going to deliver £300,000 to £350,000 of revenue. So that's kind of the spread on multiples, but it is very dependent on the geography. But they haven't changed that much in the last couple of years, but they still are at a relatively high level.
As a backstop for a buyer as well, the bank will also look to arrange an independent valuation of the business.
Yes.
So the bank have got a panel of specialist valuers who will go out once your loan has been agreed to put their own value on the goodwill and to put their own value on the freehold. And in most cases, particularly with Frank Taylor ones, the vast majority come in or around the original asking price. So particularly for you as a buyer, the bank valuation is a very useful backstop to know that you're not getting a bargain, but also you're not paying over the top. You're effectively paying market rate.
Right, I've got a challenge for you, David. We've got 4 questions and 2 minutes.
Right.
When you work in a practice that you own, do you pay yourself like a sole trader in the business? This is in regards to the patients that you see personally and the subsequent money you make. So I think that's just around, do you treat yourself as an associate and pay as you go, or do you effectively just have the profits from the business?
It's entirely up to you how you set it varies so much from person to person. Most practice owners, particularly for their first purchase, quite often will set, I don't know, they'll draw £3,000 a month So they draw a set figure each month, which they know is sufficient to cover their basic outgoings, and then every quarter they look at the surplus profit to see if they can top that up if needs be. And it varies so much from person to person, though.
Brilliant. Any benefits of buying when there is partnership availability?
Partnerships are phenomenally difficult to arrange funding on. They're also incredibly unpopular as well. The challenge you'll have there is firstly getting the finance agreed, because if you're looking to borrow money to buy into a partnership, your lending bank won't be able to take any security over the business, because the current partners will also still have a vested interest in there. And as a result, there's limited demand, and quite often partnerships are valued certainly quite a lot lower. So if the practice is worth $1 million and there are two partners, it doesn't mean each half is worth $500,000. If one partner looks to sell, his share is probably worth 350,000 rather than 500, just because there's limited demand. And also you have to think, when you want to sell, who are you going to sell to? So a tough one.
Cool. Another one, would you expect higher growth in revenue and subsequent profits in the purchase of a mixed NHS private versus a private practice after purchase, assuming increased marketing costs to draw in patients for the latter, alongside a reduction in patient numbers if the previous owner principal has left?
I think probably the greatest scope, it obviously depends how each business has been run at the moment,
Yeah,
but
sure.
probably the greatest scope for growth is probably the mixed practice, where you can look, and it may well be that you actually start to whittle down what you're doing on the NHS and start focusing more on the private, rather than, or just simply expand the private. We're seeing so many practice owners at the moment with mixed practices either handing the contract back or handing UDAs back, because they would rather concentrate on the much greater profits they know they can derive from private, and they're also in more control on the private side.
Yeah. And the last question, David, how much do we have to allow for buying costs? So I guess this is the professional fees, accountants, lawyers, and everything in that bucket.
Yeah, I would suggest 15,000 is a reasonable figure for a modest size practice. So a 750,000 to £1 million purchase. If you budget 15, top whack 20, it shouldn't be more than that. The greatest of those, that cost will be legal, your lawyer costs.
Brilliant. David, thank you. We've just stepped over the hour. Thank you to everyone that's joined us. David's details are still up on the screen. So they're on the slide there. His email address, his mobile number, his telephone number. Genuinely, David is always available whenever you want to speak to him. If you want to speak to him early in the morning, he'll be there. A lot of what we talk about, it's quite hard to give specific answers when they're it's a general environment. So if you do have any specific questions for David, just drop in an email or a WhatsApp or whatever suits you, and he'll come back to you and answer those specifically. But thank you, David. That was really good, really enjoyable. I'm sure
no problem.
People
really
feel way better informed now.
Thank you for inviting me, and thank you everybody for listening.
Brilliant, lovely. Thank you very much indeed, everybody. Have a good evening.
Take care. Bye-bye.
Cheers.